If you trade stocks, options, crypto, or pretty much anything, I can almost guarantee you've heard of Tesla, as it's on one of the most historic parabolic runs we've seen from the beginning of March, where the price was around $70, to right now, where the price is nearly $900. Every single person on the internet, every single person on Reddit, or wherever you're reading, is trading Tesla and thinking it's just going to keep going up and up and up forever. So in today's video, let's look into that thought and see how much higher we actually think Tesla's going to go. We're going to use some technical analysis tools and techniques to make a prediction on the highest price we think we'll see on Tesla. So let's go ahead and just dive right into the chart. Now, if you've watched any of my previous videos before, you know that one of my favorite things to do on a chart when it starts clean like this is just to add support and resistance lines. So that's the very first thing I'm going to do here. The idea behind these support and resistance lines is that they're price levels where there's a lot of buyers and sellers. So when we come to these price levels on either side of them, we can expect a reaction off of the levels back in the previous direction. In other words, if the price is headed upwards and there's a resistance level that we come to, we can expect to bounce off of that resistance level and come back downwards, at least for a little bit, but perhaps permanently. And in the case where we break above these resistances, we can expect the price to come back down at some point in time and use that same exact price level as support. So let's go ahead and draw some of these on the chart. Now, normally you'd want to zoom all the way out and use all of the price data to add support and resistance lines to the chart. However, pretty much all data before the January 2020 spike up to about $200 is sideways in movement, and more likely than not, we're never going to see these price levels again. So for now, I'm not going to bother with trying to add support and resistance lines all the way through the $200 range. I'm going to zoom in the chart here to basically just show all of the price data for 2020. So the very left side of my chart over here is January 2020. Through the right hand side here is where we are right now. Now the very first support and resistance line that I see is that first peak that we came to, which is around $195 in here. So I'll go ahead and add this line through here because you can see when we came up to it the first time, we definitely rejected it and used it as resistance. Second time we tried it, it actually resisted it again. And then we pulled all the way back down to $75 or so. And then third time we came up to it, we broke just a little bit above it. And then we used this line of support twice in here before a huge move upwards above $350. So those are the kind of things that I'm looking for. So as I'm moving through the chart, I'm hovering my mouse at certain levels and looking at that dotted line to see how often has this level actually been used. Has it been tested more than once? So even as I hover my mouse right around here, you can see that right here has actually been used quite a few times as well. Now we didn't have a rejection off of it the very first time, but the price definitely stalled at this $273 level before pushing up to that $350 price. And when we came back down, we used it as support twice and were unable to fall below this level before our next major run up to about $500. Next up, these are kind of the obvious ones where we have this gigantic move upwards from about $268 all the way up to $500 and then a large pullback right after it. These are always going to be key support and resistance lines, even if they haven't been used too much in the past. And as a matter of fact, if we don't see a point where price has come down and reuse these as support, which we almost always will see after a breakout of a key level, it could be a really good indicator that when the stock does finally start to pull back, it's going to use that level as its next support. So this is definitely a crucial one we want to draw on the chart, even though we haven't come back down and tested this as support just yet. It was resistance through here and maybe even a little bit through here before our huge run from $500 all the way up to this $900 price. So from here, I don't see any too significant levels. I do see a couple that I can pinpoint. So we had this move up that started around $378, broke through our $502 level right here, and got to about $605. And then at that spot, we rejected all the way back down to about $540. So not a huge pullback like you saw with this one, and even like this one. However, there is a decent pullback here, and we definitely rejected this spot. And then price hovered around it for quite a while. So I don't love this line. It's not my favorite line, and it definitely doesn't look as strong as this $502 line. But it is possible that when we come back down, this line could act as good support and prove itself to be even stronger. So we'll have it on our chart just in case. The only other one I can see that you could possibly draw on this chart is this rejection of 605 as a run all the way up to almost $700 in here, which had a pullback right after back down to that 605 level almost to about $613. So another $80 pullback through here, And on the second time, we kind of just blew right through it. But again, maybe when we come back down, if we come back down here or later, or if price ever comes back down to this level, maybe it'll be used as support. And so having this line on our chart will definitely give us a heads up ahead of time. Now, of course, as we're sitting in price discovery, where price is continually making new all-time highs, these previous support and resistance lines aren't super important for helping us predict how high the market's going to go. Of course, we see that there are no support and resistance lines currently above about $694, but that of course doesn't imply that Tesla's going to go to infinity, even though there's none of these lines drawn yet. There are definitely other tools and techniques we can use to predict where the peak is going to actually happen. So let's zoom back out a bit. My favorite tool to predict long-term movements in the market, and in my opinion, the absolute best one, is called Elliott Wave Theory. Now, if you've watched my previous videos, maybe you know a little or a lot about Elliott Wave Theory so far. However, just in case you haven't, I want to give you a quick summary. Elliott Wave Theory states that the market trends in waves of 5 and corrects in waves of 3. In other words, it might look something like this, where the yellow is our 5 waves going upwards, and the white is our 3 waves coming back downwards. Now you can see that each of the 5 waves aren't in the upwards direction. We're going to have these pullbacks in the market, and very similarly, on the flip side, with an ABC, all of the waves aren't downwards. The B wave actually heads back upwards itself. The very last detail you need to know before moving forward here is that all of these waves are actually made up of other waves. So inside of this one wave right here, we actually have another 5-wave structure that makes it up. And this applies to each of the 1, 3, and 5 in our upwards direction. And in our waves that point downwards, the 2 and the 4, this ABC structure is actually inside of them. So it would look something like this. So you have the basic idea that the market trends in 5s, corrects in 3s, and that these waves are made up of other waves. Let's see how we can apply this to Tesla. Now, if you want to challenge yourself, pause this video here for a minute, pull out a chart of Tesla, and see if you can figure out where you think the 5 waves are on this chart. If you're completely new to Elliott Wave Theory, that might be extremely difficult. You might end up completely off, and that's totally okay. Elliott Wave Theory is extremely complex, but it's also extremely powerful. And if you want to start learning it from the beginning, I do have a playlist that goes over every single rule and guideline of Elliott Wave Theory. It's a 10-part playlist. It's over 2 hours in content. So if you want to learn about it, feel free to dive right in. I'll put a link in the top right corner right now. So when I first eyeball this chart, the 5-wave structure is actually relatively clear to me. We'll start with our 0, the beginning of our 1 wave, all the way down here somewhere. It doesn't matter exactly where we draw it. It might be this low that we have all the way over here, which is actually what I'll use, or maybe it's further along somewhere in here. The point is the 0 is somewhere in this area, and then the 1, which we're going to draw, is at this first peak up here. Next up, the 2 at the pullback after the 1. The 3 will be the next major move before a huge pullback, and I think the 3 is right here. Now, if you're a beginner, you might have thought that this was the 3rd wave, and looking at the market in real time, had you only known this price action, or even if you knew up to this price action, you might have definitely called this the 3 wave in real time. However, now that we can see what has happened after it, if this was the 3, we know that we need to put in a 4 and a 5, which would have to be the 4 right here, and the 5 would have to be just this move. But then where does the rest of the price action come in? Now, yes, there are waves within other waves. However, if this is a 5th wave right here, in other words, if we have something like this, it means that this overall structure itself has to be the 1 wave, because I told you there's a 5-wave structure inside of the 1 wave, and then this would have to be our 2 wave. And if we apply other rules and guidelines of Elliott Wave Theory, which I don't have too much time to go into in this video, the likelihood that this is just a 1, 2 right here, and we're in the 3rd wave, is extremely low. 2 waves tend to correct at least 50% of the length of the 1 wave. And just by eyeballing it, you can see that the 1 is extremely longer than the 2 wave. And the 2 wave would only correct maybe 38 or possibly even as low as 23% of the 1 wave, just by eyeballing it here. So it's not even close to our 50% guideline. Instead, here's what I think the count is. We got our 0 to 1 here, our 2 here, and then I think the 3rd is all the way up here, with this being our 4th wave. And I think the 4th wave bottom is actually in right here, and I'll dive more into that shortly to show you why. And I think we're right now in the 5th wave. So I'm going to take the line off this just to keep my chart a bit clean, and the next thing we're going to do is actually go validate each of these waves. we're going to apply Elliott Wave rules and guidelines to help us understand if our count is correct and also help us understand where this fifth wave is actually going to land. Because as of right now, it could be here, could be 100 points higher, it could be 500 points higher. We don't have any sort of certainty without applying the other Elliott Wave rules and guidelines. So first off, the 1 to 2. In order to validate this, I use the Fibonacci retracement tool, and we're going to pull from the bottom to the top of the 1. Now I told you the 2 typically retraces at least 50%, and I like to actually see it at the 61.8% retracement, which will be my golden zone. However, it's not uncommon for us to be only 38% retracement, and it's also not uncommon to see something like a 78.6% retracement on our Fibonacci tool. Anything more or less than those values starts to get pretty unlikely. Now they do happen about 10% of the time where it's less than 38 or more than 78%. However, we want to make sure we're on the right side of probabilities here. So I'll pull that Fibonacci retracement tool, and I'm just going to zoom into that part now so you can see specifically this pull right here and how deep it goes. So from the very bottom, our low is right there, to the top all the way up here, and we'll pull it sideways so it covers our price. And you can see the 2 is almost perfectly to this blue 786, or a 78.6% retracement of this entire 1 wave. Now I just told you that this 50 to 61.8 zone between the red line and the yellow line here is our highest probability zone, and that's the zone we would like the 2 to fall in. However, just seeing how perfect this 2 lands almost to the penny right at that 786 is actually also a pretty good sign. And we know that somewhere around 20% of the time, we actually do come down to the 786 on our 2. So while it's not our highest probability setup, we need to have a 1-2 somewhere, and I like how this lands with the fib. The other thing I told you earlier is that each of the 2 waves are made up of a 3-wave ABC inside of them. And this one is actually pretty clear to me. From the top of our 1 right here, we have an A wave that goes almost straight down right away, a B wave that tries to go above the start of the A wave, which is the definition of what a B wave tries to do, and then a C wave that puts in our final move down. The ABC inside of this 2 is extremely clear, which helps us validate it even further. So we know our 1-2 is pretty good. The next thing I want to do is dive into this 4 wave. Now, often in Elliott Wave Theory, 4 waves are triangles. There are all sorts of different triangles, but they're labeled as A, B, C, D, E structures. In other words, instead of this 4 wave being an ABC, a 3-wave move, like I told you it was earlier, 4 waves can also be triangles where they're 5-wave corrections. So even if we just start with trend lines on this right here, you can see that if we try to connect this, it actually starts to form a bit of a triangle shape itself. Now maybe it's not a perfect triangle right here, and maybe these lines will end up being off based on where we label the A, B, C, D, E, but you can see that we're definitely moving sideways in pattern from about the beginning of September in here through the middle of November. And this is another good sign that we're in a triangle. The other key characteristic we look for in Elliott Wave triangles is that volume is decreasing throughout the entire triangle, and when we finally break out of it, we get a huge volume spike. So we'll start from our 3 peak right here and just look at the volume right here, and I'll put an arrow straight down so we can see right where that lines up. And then here would be the breakout of this triangle, this green candle right here, because you can see that if I extend this trend line this way, this green candle is clearly the breakout before our huge uptrend. So let's put another arrow right at this green candle right there and point it downwards. So if we just look at volume on the bottom right here, I'm going to box off the area where we're thinking that we have a triangle. Now it should be pretty clear to you that volume is decreasing throughout this entire triangle. We have this peak of volume in here, and then the one afterwards, this peak of volume in here is lower than the previous one. Again, lower than this volume right in here. Next peak of volume in here, lower than here, etc. all the way down. Volume is just continually decreasing all throughout our triangle. So this is an excellent sign that we have the right idea here, that we did form a triangle in our 4th wave. And just for the sake of labeling it here, I'll show you what that would look like. We'd have our A wave as the first move down here, and next up we'd have our B wave. Now at first I might have thought that the B wave was in here, however the B needs to be above the D in our triangle, so we actually want to use this as our B wave. And this is totally valid because each of the waves in this triangle are actually supposed to be 3 waves themselves. Now some of them aren't going to be as clear as others, such as this B wave where we can clearly see it's 1 move up here, 1 down here, and 1 back up here for an ABC. Next up we'd have our C wave as the next low, our D wave is the next push up after that, and finally our E wave as the final low in there. In Elliott Wave Theory, we connect the A to the C to draw our trend line off of it, and the B to our D, just like this. And just to make it look a bit prettier on the chart, you can pull this trend line back so that it lines up with the first one, and you can see this is definitely a triangle pattern, where the apex would have been somewhere out here if we were to keep pulling these lines. So we have our fourth wave drawn, it's validated, it's pretty clearly a triangle. Now let's validate that this is actually our third wave, and that this depth retracement of our fourth wave is pretty good. In order to validate a third wave, we want to use this trend-based fib extension tool on TradingView. What we see in Elliott Wave Theory is that the third wave is typically correlated to the length of the first wave by a ratio of 1.618. That's the most common level. If we break past that 1.618 level, the second most common level for the third wave is 2.618. Let me show you what that looks like. We'll use this tool and we'll click at the bottom of our 1 down here and at the top of our 1, and this is giving us the length of the 1 wave right here, and then we'll click at the bottom of our 2 wave and we'll pull this sideways. Now how this works is this pink line would be the same thing as if we took the distance from the bottom to the top of our 1 right here, just like this, and we move this to be at the bottom of our 2, where we had our third click of the tool. And you can see that pink line is 1. That's because it's 1.0, or 1 times the length of the 1 wave put onto the bottom of the 2 wave right there. So like I said, the most common zone, 1.618 to 1.75, inside of this box right here. So once again, in real time, had you been watching this, it might have been really easy to think that this was our third wave in here, because this is exactly where you'd expect the third wave to fall. But as I said before, now we know that this is actually the third wave, and I just told you this 2.618 is actually the second most common spot for the third wave to fall, once it goes past this 1.618 to 1.7 box that we just drew in here. So this third wave falls perfectly, and in a bullish market, this is definitely a target you want to be looking for when we break through this zone right here. So that validates our third wave pretty strongly and gives us a lot of conviction that we have that third wave correct. Next up, we validate the depth of the 4 wave with our Fibonacci retracement tool once again. We'll pull from the bottom of our 2 to the top of our third and pull sideways. Now whereas the 2 wave, when you pull the fib retracement from the bottom to the top of the 1, falls between this red and yellow line more often than not, the 4 wave tends to fall between this blue 38.2% retracement and this red 50% retracement inside of this box right here. And you can see on our first push down, we actually did come into that. However, when you have a triangle in the 4th wave, because a lot more time is put in, the final retracement depth that you actually end up seeing, which is measured by the bottom of our E wave here and not the bottom of our A wave, is more often than not more shallow than this target zone. And the 236 is a really good target for where you want to see the bottom of the E wave. And you can see we fall almost perfectly at that fib level. So this really helps validate our 4th wave as well. So now we have the 1, 2, 3, and 4 validated. There are quite a few things we can do from here to validate the 5th wave. To predict where the 5th wave is going to fall, we want to use the parallel channel tool here on TradingView. What we're going to do with this parallel channel is click at the bottom of the 2 wave to the bottom of the 4 wave and connect it just like this. Afterwards, we'll pull to the top of the 3rd wave here. And in a normal market, we'd expect the 5th wave to actually fall at the top of this parallel channel right here. And you can see that we actually ended up having a lot of rejection on the top of this parallel channel here. However, we did end up breaking upwards, so this parallel channel isn't too helpful for us anymore. Another thing we can do is look at the ratio of the 1 wave to the 5 wave. Now in a typical Elliott Wave 5 wave series, the 3rd wave is the longest wave, and we typically see that the 1 wave and the 5 wave are correlated by a 1-to-1 ratio. This is the most common situation, where the length of the 1 wave is exactly the same as the length of the 5th wave. However, sometimes our 5th wave is actually the longest wave, and so then we would look for something like the 1.272 level or the 1.618 level like we did with the 1 to 3. So let's use our trend-based fib extension tool and just pull that from the bottom of the 1 to the top of the 1 here and click on the bottom of the 4. And now remember, when we have a triangle, the bottom of our 4 is the bottom of the E wave, not the lowest spot that we saw. This is known as our orthodox bottom. And we'll just pull this sideways, and you can see that we've actually blown through all of the levels on this fib pull already. This 1-to-1 is the most common in a normal situation, 1.272 being the second most common, 1.618 to 1.75 third most common, and anything after that is just pretty unlikely. But again, this fifth wave is our longest wave in the series, so we actually need to do something else to try and get a better prediction on this. When the fifth wave is the longest, what we can do is pull this trend-based fib extension tool from the bottom of our 1 to the top of our third and measure the distance from 0 to 3 relative to 5. And once again, we'd be looking at those same targets of 1.0 or 1.272 as the most common spots. So we'll just drag this upwards where we clicked at the 1 right here, and instead measure from the bottom of our 1 to the top of our 3, and we already have this on the bottom of our 4. And you can see where we are right now is actually right at that 1.0 spot. So I'll put a box around that as a potential spot for where the fifth wave might fall. However, also all the way up here, this green line is the 1.272, and these are both very common spots. So aside from those two things, it's hard to add any sort of confluence to this chart that would help us predict the top of the fifth wave. The very last thing I would start to do is look at both volume and the candlesticks that we're putting in. You can see in the daily candles here, the Tesla still looks extremely bullish. Our volume is actually still increasing, and none of these candles start to look like a reversal candle just yet. And we're already at the top of this first box here. So this would have me strongly leaning towards this second box in here. The other sort of hint that we can do is that we know that this fifth wave needs to have 5 waves inside of it. Now, it's extremely hard to count on this daily chart right here. However, we know that the third wave is typically the strongest wave in a 5-wave series. And if we just look at volume only right here, we can get a really good sign that our third wave is this huge volume peak that we had on December 18th right here. So however the 1-2 ends up counting inside of here, we can predict that this is actually our third wave. The fourth wave is this small pullback inside of here, and we're working on the fifth wave right now, which helps us validate that a top is somewhat near. The very last thing I'll add to this is that you can see this top box right here actually perfectly lines up with $1,000 at the top of the box. And psychological levels in trading are extremely important. They're basically a natural support and resistance, where people are going to see Tesla hit $1,000 and think to themselves, there's no way we're going higher than $1,000. I should start to take profit right now. And if enough people start to do this and enough institutions are on the same page, we could easily reject at that psychological $1,000 before pushing above it. So now, let's think about the situation where Tesla does make it to $1,000, or maybe just short of it because people might be front-running the sell of $1,000. Where are we going to pull back to? That's the ultimate question. Some people think Tesla is never going to see prices under 700, 800, maybe even under where we are right now, but I can almost guarantee you that Tesla is going to pull back, and it's going to pull back hard. It's been running exponentially upwards right here, and we're likely to see a sharp decrease downwards afterwards. Because remember, once we finish this 5-wave structure in here, this is all just a 1 wave on a larger degree. And that 2 wave is gonna have to come in. Now, is it gonna fall short to that 38.2% retracement that's slightly less likely? Yeah, this is possible, but it's more likely that we're gonna see something like a 50% retracement. So if we just simulate out what that looks like, our 0 of the larger degree would be down here. This would finish a 1 wave. We're going to pull back for the 2 wave. Let's pull our Fibonacci retracement, and let's say we get all the way up to the top there at almost exactly $1,000 and pull this sideways. Where's the most likely spot for Tesla to fall? It's going to be this zone from about $515 here all the way back into this $370 range. Now, maybe with a stock that's so bullish, with a company that's changing the world, with so many people on board with the fundamentals, we do only see it come down to this 38.2%. Remember that anything less than 38.2% is extremely unlikely to happen. So are you really going to bet on it not pulling back 38.2%? Would you rather bet on the 90% probability of it going past that line, or the 10% probability of it falling short of that line? Personally, I'd rather be on the side of probability and expect it to fall in this range. So if we just look back, we see that this $502 level right here, which is the top of our third wave, is a support and resistance line that has never been retested as support on the way back down. So this would be my ideal spot to see Tesla fall to. A run up to finish our move to $1,000, and then a pullback back down to $500 here. Now, of course, this isn't going to happen overnight. We're not going to see $1,000 tomorrow, or, well, maybe we will with Tesla, but we're definitely not going to see the pullback all the way down to $502. Remember that it's a 3-wave move downwards, so maybe we would see something like this, where we come down to $694-ish, this support and resistance level that we had before, pull back up for the B wave in here, and then finally come back down, maybe at the end of 2021 or into 2022. So that's my personal opinion on what the price action of Tesla will actually look like. I do think we're going to continue this rise upwards into our next box from about $977 up to almost $1,000 in here, likely fall just short of $1,000, and then we're going to start a nice pullback all the way through 2021, perhaps with a first large bounce off of $694 and a final price target of around $500. And by the way, do note, if this does happen, if we do go up to here and we do come down to here at $500, this could be a generational buy on Tesla. Remember that this is a 1-2 on a larger degree here, and the third wave would be predicting price targets way, way, way higher, significantly above $2,000. So if this does end up happening, don't panic when Tesla pulls back. Realize that it could be one of the best opportunities for you to take a trade and already have a plan to execute on when this does happen. If it doesn't happen, too bad. We have other trades that we could take, and if it does, you definitely want to be prepared. Thank you so much for watching this video and staying till the end. If you want to trade options, stocks, crypto, or really anything with me, I do run a Discord group, and I'll put a link to it in the description below. Come check it out. We're trading options every single day, live, with top performing mentors, amazing alerts, constant education, and an overall great community. So click that link and come hang out with us. I promise you won't regret it. And if you like this video, please do me a huge favor, click the like button below and hit subscribe for future similar content. I really do appreciate all of your support. And as always, good luck trading.